Hello, everyone, and welcome to Magnetic Collaboration. I'm Pradeep Paniadi, Senior Manager at Cisco Investments, and I will be your host for today's event. And we'll use Slido for live polls today throughout the event to hear from you. Thank you for participating in the first poll. It looks like about 68% of you are working from home, 26% joining from the office, and 6% other, which is pertinent to our topic and similar to our views here at Cisco, where we believe hybrid work is not where you go, but what you do and how you do it. Stay tuned, we have a few more Slido polls throughout the broadcast. Now let's get into the event. Magnetic Collaboration is a live virtual summit that brings together Cisco executives, leaders at Cisco Investments, and VCs. And today we are focusing on the state of collaboration in the world of hybrid work. Why collaboration? Because over the last 2 years, we've witnessed the birth of an entirely new way of working without plans of returning to the traditional ways of working. The collaboration landscape is undergoing a dramatic shift across all categories of hybrid work: communication and collaboration, productivity and automation, customer experience, and employee experience. Addressing these complex trends and staying ahead of the competition will require a collective effort. This includes entrepreneurs, investors, customers, and leading tech platforms like Cisco. Today's summit will feature a compelling agenda addressing these seismic trends and what lies ahead for the future. We brought together a top executive leadership from Cisco Investments and from Cisco's Collaboration Business Group, along with two of the industry's leading investors from Andreessen Horowitz and Scale Venture Partners. Over the next 90 minutes, they'll share with you their insights into the evolving collaboration landscape, as well as emerging innovation and investing trends in hybrid work. But before we get started, for brief context, Cisco has been an active acquirer and investor to drive innovation since 1999. This snapshot here represents just a small sample of acquisitions and investments that have resulted in Cisco's leadership positions in the collaboration market. We have several members of Cisco's corporate development and Cisco Investments team participating today, alongside executives from the Collaboration Business Group. Our two teams collaborate to invest and deliver homegrown integrated solutions to the market. Currently, Cisco is focused on 6 different areas of collaboration to bring innovation to our customers, partners, and the broader ecosystem. Cisco develops and invests in next generation innovation to accomplish this goal. These 6 areas are workplace safety, hybrid work, devices, CPaaS or Communications Platform as a Service, customer experience, and contact center. But bringing innovation across these 6 areas is not something we can do alone. We are exceptionally proud of the robust partner ecosystem we have built, including startups, independent software vendors, and others, to deliver the best in class innovation our customers demand. There are many benefits of becoming a Cisco collaboration partner, including accelerate your business growth and go to market motions, build connections with our global sales teams and customers, visibility to our customers through partner marketing programs and events. Please note, if you have any questions during the event, make sure to submit them into the Q&A panel. We are answering them live. Great responses coming in through the Slido polls. So the question looks like future work week for the majority of you is hybrid. Hybrid work, working remotely. It's a great theme and it's in line with what we're talking today. All right, without further ado, let's get into the event. First up, we have a fireside chat with Janie Ho, Vice President of Cisco Investments, and Javed Khan, Senior Vice President and GM of the Collaboration Business Group. Janie leads investments and acquisitions in the collaboration and security segments. Javed leads Cisco's multi-billion-dollar collaboration business group. Over to you, Janie.
Great. Thanks, Pradeep. Thanks for that great introduction. And hi, Javed. Good to see you. We usually meet in meetings all the time, so it's great to be able to do this conversations, this format, and with the audience members here.
Yeah, hi Jenny, nice to see you. I didn't know you were going to be in the office, otherwise I'd come join you over there, which is relevant to I think what we're going to talk about.
We're mirroring our audience actually. So that was I love seeing Slido, which is one of our acquisitions. Actually, we worked on together. and seeing it fully integrated, but we're mirroring our audience. We're truly in hybrid form, right? So people are at home, at work, and you actually, I don't know, how do you know I'm in the office? This is like could be at home too. But excited to be in this conversation with you. We've been working really closely together, probably even more so during the pandemic, right? So collaboration has been front and center on our acquisition investment strategies over the last couple of years. And so I'm sure the audience is very excited to hear directly from you in terms of our strategy and what we're working on and with your team. But before, I know the audience I can see the questions coming in, so I'll try to interleave that with some of the questions I have. And I should let everybody know Javed only likes hard questions, so please reserve those for Javed. And I will only pick the hardest one, so to make this session super exciting. So, but before we go there, Javed, just to help the audience people to get to know you a little bit better, can you tell us a little bit about your career and your journey over time, and before we jump into the questions?
Sure, Jenny. It's great. It's great to see you. I was just thinking about it as you were talking. We did 5 acquisitions the last 18 months, and
kept us very busy. We were tied
and
to
we
our
didn't
desks.
meet in person, actually.
No, entirely virtually. It's actually absolutely amazing. I'm still. I know I should get over it, but I'm still amazed how we did all that.
Yeah. So a little bit about me, and thanks for having me here today. I believe it or not, actually started in a very different space. I spent, in fact, more time in collaboration in another adjacent, I shouldn't say adjacent, a different area, security, actually. So I spent the first half of my career and then some in security. And I started off in the consumer space, actually. So the Norton products, the company is not in LifeLock now, but I spent a lot of time there, which was then a part of Symantec. But I came from a security background. But one of the things that I enjoy doing, that I was doing then and brought me to Cisco, was working on products, whether they were consumer security or enterprise security, which was the second half of my career there, which were end user focused products and products. I like building products for scale. So both those stints in the security industry were about end user focused products and built for a scale market, which means tens of millions of customers. Now the reason I like doing that is it has its upside and downsides. The upside is when you get an experience right, when you get a solution right, the feedback is instantaneous, right? You hear from end users versus other enterprise software where sometimes the feedback is not as immediate or it's more limited. The second thing is the downside is if you get something wrong, you hear about it immediately too, and that was very relevant to when I took my first job here at Cisco, which was in the collaboration group, smaller group, was in the Webex team. I came here because of that end user focus and because of an opportunity to work at scale. I've had various roles in that group, and those two things have held true, which is when we've done things right, you get that feedback. Sometimes we didn't do things quite right, and we heard from our end users too. I found myself in April 2020 in charge of the entire collaboration business, which was a very interesting time because COVID was just getting started. And it's been quite a journey since, and I cannot imagine another space which is already gone through a massive transformation and is going to continue to do that, I think, for the next 5-10 years. So an exciting space to be in, and lots happening.
Yeah, and that's a great introduction to the audience, and I can. It explains a lot because every meeting you're with Javed, he's always constantly watching the user experience. Then every meeting has its thing, and I seen the extreme focus on user. No matter what we're talking about, I know you're always actually watching the experience of the meeting. So that focus on the end user is super important, and that really comes through Javed every single day. And I will say your team, you and your team, they're your hardest working team. I mean, just around the clock, and a lot of our conversations, and a lot of it is enabled by WebEx actually, and especially in the last couple of years. So I want to jump into some of the questions I know the audience is curious about. You lead the collaboration business group, and I'm sure one thing that everyone wants to know about is what is your team working on right now? What's important to you right now?
Yeah, and I think we saw that in the Slido poll up front,
Yes.
which is a fantastic acquisition that we made. I use it every single day. Is really hybrid work, And to kind of explain that a little bit, if you back out pre-COVID, the collaboration business that I run was in some ways five fairly structured but disparate businesses, right? We were in the video meetings business. That was a large business, which is really WebEx. We had a calling franchise, which was focused on that dial tone. People don't realize, what it takes to get that dial tone to be always available. We were in the hardware business, both building video conferencing devices and phones, and then we were in the contact center business. But these were relatively standalone, independent collaboration tools. Some focused towards employees and end users, others focused towards your customers. And what had started to happen was these tools had started to converge. How we collaborate was starting to come together. And what COVID really did was it just accelerated that convergence. I think we went through the last 2 years a kind of fundamental transformation as people went remote. But what we are noticing right now is we are at the beginnings of yet another massive transformation. And the word hybrid work comes to mind, right? Hybrid work, I say this all the time, is actually very different from how we worked the last 2 years. Because last 2 years, in some ways, we were all at home. Things were democratic. The tools you use, you showed up as a box in that 5x5 grid. But that is fundamentally changing, right? Imagine if you had three people in the room with you. Now you'd be three people in one box, and everybody else in their own little box in the grid. So hybrid work is going to be fundamentally different. And what we are seeing is our customers asking for, what does my new workspace look like? What are the tools that I need to use in this new hybrid world? That's the second thing. How am I going to work? And that tool set is emerging and changing. And then manageability and security is top of mind, because the way you manage this infrastructure, the way you manage security fundamentally changed. So those three things are top of mind for our customers, and that is the pivot we are going through. And I'll add one more thing. My conversations have become, and I think this is important for the audience to hear, is it used to be an IT focused conversation. Now the conversations are with facilities. Now the conversations are with HR. What is my company culture? You started off asking, how did you know I was in the office, right? Those other functions are very big players. Marketing teams when it comes to events, very big influencers in this new hybrid world. We are in the middle of this transition, and that's what we are focused on.
Yeah, absolutely, Javed. And I was following you all the way along. I'm sure it resonates with everyone in the audience. We're all going through it right now because I know a lot of companies are now going back to the office. We are, right? It's true hybrid form. So it's what the business drives. So you can be in the office or at home, and it's how the business requirements drive. So I'm sure the audience is going through that. And you mentioned kind of some of the people in the room, some of the people outside the room, and like how many people and how that balances out, and the tools that we need to continue to look at that evolution and dynamic is super relevant right now. We're going through it right now as we speak. You mentioned earlier, it has been very much exactly what you mentioned. It has been a transformation for the enterprise in terms of how we work together in the last couple of years, right? So we went through this very unprecedented time during pandemic. As you said, we were all at home. And so that's one dynamic. And now we're shifting into kind of another phase of kind of hybrid work with us in different places, and really not from all different locations, right? If I put on my virtual background, you really don't know where I am. So you're not going to find out. So I want to really kind of dig into that a little deeper. If you can talk, and you started kind of actually giving us a landscape already, but maybe a little more about how you feel like this, what you just described, how that has shifted the collaboration market, a little more about that. And then what do you see as, and we've been seeing it together. I'd love to hear your thought on kind of the innovation horizon for collaboration, because it's so rich, right? Because just in that backdrop, such rich opportunities for innovation. So can you talk about that a little bit more?
Yeah, let me. I think there's so many stories I can tell from the last 2 years, and maybe I'll start with a few because that need has changed, and I think there's a huge opportunity there. So if I were to kind of go back to March, April of 2020, the main transition that was happening was users who were predominantly in the office, employees who were predominantly in the office, who went home. Now that meant that so two things happened. One is overnight, the scale expectations on the collaboration portfolio just went through the roof. Right. So I remember this very clearly. I came in on a Monday in late March, early April, and literally our traffic was 10x, right? And that's a traffic pattern. For those of us who run SaaS services, are used to seeing an increase in demand, but that was just unusual, especially at our scale, right? It was just massive. And you feel like you're at Levi Stadium with the 70,000 capacity, and suddenly 700,000 people showed up for the concert, right? So we focused initially on scaling our collaboration solutions. And the second thing we focused on was the end user was now not on a corporate network, they were on a unmanaged home network, right? So that meant the end user expectations around experience became front and center, right? So that's what the industry doubled down on the first few months. We actually did a phenomenal job at that. I think the entire industry did a great job. Sometimes we don't get enough credit for millions of people, tens of millions, hundreds of millions moving to a new setup and staying productive. So it was about scaling. It was about the consumerization of that experience even further. A new class of users came in, and end user experience became king. Video conferencing took off. Agents, contact center agents, started working from home. And it also forced a migration of these solutions to the cloud. So there was a slower migration happening of calling contact center meetings to the cloud, but COVID just forced that. So that was really the first phase. And I think we did a pretty darn good job. In fact, we figured out how to stay productive, in fact, more productive by certain measures. But as we start to come out of this phase, and as you start to get to that hybrid work environment, we are seeing, I mentioned some of these things earlier. Number one, what does my workspace look like? There's a big question mark. Do I all the way from some people saying, do I need an office, to yes, I need an office, but it looks very different. And what goes hand in hand with that is, what does the hardware on the office then look like? I'm going to have conference rooms with video conferencing systems, somewhat similar to what we had before, but you're not going to have assigned spaces. People are going to show up to the office. They'll still expect video, whether they're sitting at a desk or not. Open spaces will emerge. You'll see an emergence of just ideation spaces. They are not assigned spaces. You collaborate over there. You show up there. You actually show up to socialize in some way. So what does the workspace of the future looks like? What is the hardware configuration for that? I think you touched upon one of the problems that I don't think we've solved very well yet, which is, how do I know if an space is available for me when I show up in the office? And by the way, how do I know if Janie's in the office, and which office is she in? Because I might want to use the opportunity to meet up with her in person. So the workspaces of the future, I think, might shrink, as many people claim, but they will look very different, and there is an opportunity around that to kind of reinvent how people work. So we've got a unique portfolio. We've got these hardware devices. We've got Meraki gear, our networking gear. Interestingly, they're all collecting information about usage patterns around things like air quality for security reasons, temperature sensors, and so on. And I think you'll see those things come together on the workspace front. The second evolution that we've seen is the tools themselves. The early days of the pandemic was about video conferencing, right? It became front and center. We wanted to see people. We wanted to talk to people. But over the last few years, we've seen, last couple of years, what's happened is a new class of tools have emerged, which are not just about video, but other ways to collaborate. So how do I whiteboard? Because when I was there in person, I'd just stand up and start to whiteboard. So you've seen whiteboarding tools emerge. But that's one such example of a collaboration tool. You'll see a lot more of that. And then the other thing we are seeing is on the IT front, and I could go on this, but IT and the security folks are really concerned, because now people are joining meetings from different form factors, from different locations. How do you make sure that my most important corporate assets are still secured? So the definition of security, how you secure your best assets, is changing. So those are some of the kind of main trends, and that is where I think you're seeing a lot of innovation, both inside Cisco and outside Cisco.
Yeah, and the topic's so relevant. Everything you say, it's like what I lived through. The team wants to know, like, are you in the office, or are you not? And are we having a one-on-ones in person, or are we doing it over WebEx? So yes, definitely very relevant. As you're speaking, our audience are actually asking some interesting questions, and they're really tuning into what you're saying. One of the questions I think is good to talk about. It's pretty important about engagement. What are some of the things that you're seeing around engagement? Because it's such an important topic, right? As we go through this evolution. engagement of employees and engagement of the conversations that we're having. Can you talk a little bit about that? And then the other question they asked about, which I also think is interesting because I know it resonates with everyone because we all work and we're working in the same context. And it's probably I would like to say it's probably the largest shift for us as enterprise workers that we have experienced. I mean, I've been, 2+ decades in working, and it is the largest shift that we're all experiencing. And so the question they ask is kind of this synchronous and asynchronous collaboration, kind of that. What are we doing about that balance? I thought those are two great questions that are really tuning into your kind of description of the changes and what we're doing. Can you comment a little bit more about those two areas?
Sure. So let's start with engagement. I think engagement, we started off with video, and we were able to see people, talk to people. But as those meetings start to get more complex, whether it's more people or people in different locations, or better yet, a mix of people, right? Where some are in the office, I'm remote now. How do you make sure that you still are able to engage? Not just audio video, but in other means. For example, let's start with visual cues, right? When you're in the room, you can see a person's like tuning out, not starting to pay attention. If you're remote, it's a little harder to kind of follow along. A second use case is what happens when there are 100 people. So now I have an all hands coming up here later today, and there's going to be a couple thousand people there. How do I now engage 2,000 people? In fact, technology today allows you to engage in a much better fashion than before. A good example of that was Slido, right? So we got quite a few responses here at the beginning on the question of hybrid work. And I was able to do that without having have people raise their hands or go back and forth and try to coordinate that. So how you engage in meetings, technology is now able to enable using these newer tools. And then this is where I think AI has a fantastic role to play as well, right? So one of the things we realized early is, and we saw this in the education space, where teachers on video calls ask students to raise their hands, right? And the natural inclination of kids, especially younger kids, was to do this, right? Which is not what they were trying to say. It was really click the button that says raise your hands. But why can't technology recognize that I've raised my hands? And taking it further, which is how, can we use those visual cues to actually now transfer the microphone to the person who's trying to engage? So that's an example of newer class of engagement tools. And one other somewhat, I think, related concept is related to employee well-being, right? So when you now use these tools for an extended period of time, one of the downsides has been that you are somewhat always on because the tools make it so easy. But at the same time, are you spending way too much time just in video meetings, just on calls? And what is that doing from a long-term employee engagement standpoint, right? What is that doing to my employee culture? So around that, there is a set of tools emerging around analytics, which is, can we help me, the employee, or the company, help better understand what's happening to the engagement level, the motivation level, and eventually actually employee well-being. So I think there's a rich set of analytics tools that we are building, and I see that as a space where we'll see a lot of innovation. I think your second question is also a very relevant one, and this also relates to this problem of fatigue around synchronous meetings, right? We had to schedule this meeting and all of us had to jump on this call at the same time, and that takes planning, coordination, but some of those communication, some of those meetings can be done asynchronously. So we realized that you could actually save people time if you provided them with a tool where I record when it's convenient for me, I broadcast that, and others consume it when it's convenient for them. But you still want to continue to have an engaged conversation, which is, I should be able to comment on it, I should be able to use my emojis, and I should be able to do Q&A, but it happens asynchronously. Now you'd argue, why can't I just do that using my favorite messaging tool? And yes, you can, but it's not necessarily that rich video interaction. So we launched just this month a new tool called Vidcast, which is an example of that, which is asynchronously in the enterprise. How do you communicate without requiring a meeting, and then doing so you are reaching a lot more people, and you're reaching it without using up a whole bunch of time for a large group. So I use that pretty effectively, but that is a new class of tools emerging, which is around asynchronous communication.
Yeah, and it's totally fascinating. We're using it every day ourselves, right? Just for this discussion, for example, we did one short live meeting, and we did some discussions in offline through the WebEx thread that we had, and posting documents and giving feedback, and then so all different modes integrated into the preparing for the discussion. So, and it really increases the productivity. That's, when you have that well integrated. So it's really interesting to hear you say that. If we could run AI on the audience questions, I would say the engagement is very high, because I think you are covering some of the topics that are coming in, and maybe they're just looking to hear more. They're super interested on what you see as kind of the next horizon of innovations for collaboration. I think you already touched on some of those, but are there any things that you would call out even more specifically for the audience?
Yeah, so I think let me maybe take a couple of examples where we've made some progress, but I think the audience, if you're thinking of a new idea, this is a space to think about, right? I don't, no, I think there's a huge opportunity around this new workspace, right? Which is how do I make sure that when I show up in the office, I'm as productive, ideally actually as more productive than when I'm at home, right? And in an office environment where I'm likely not going to have an assigned space. I actually don't have an assigned space anymore, right? So what does that mean? That means, number one, am I going to even be able to find a space? Let's start with that, right? And if I find a space, who else is in the office? How do I make sure, I'm able to kind of find that out and collaborate with them? And can I do that while not losing the richness of video and the tools and the learnings of the past? So I think reimagining what tomorrow's workspace looks like is a huge area of opportunity, and I think that means newer kinds of devices and newer kinds of software tools that extend beyond just the video conferencing use case that we're used to. And I think as companies solve that, that is going to be a big top of mind thing here in the next year or so. The workspaces are going to go through a fundamental reimagination of it. The second thing is a new class of tools. So video conferencing was great, we all love it, but I think video conferencing also became mainstream. So now the focus, we believe, is going to shift towards the work rather than the video conferencing meeting itself, right? So today everything's centered around the video meeting, but let's take a good example would be tools like Salesforce and ServiceNow, which are used for very specific solving certain very specific use cases. All of these tools, or a customer interaction, a contact center interaction, video will now get injected into these interactions, making that interaction a lot more richer. So I think you'll see existing business problems now get infused with collaboration tools versus collaboration tools being the center of the world, right? And that's why you're seeing things like CPaaS and other API-based solutions emerge. But each area, each business problem will now see collaboration get infused and make that use case become more effective and productive. And I think that is the next phase that we are going through. That's why you're seeing open platforms and APIs start to emerge. Healthcare and is a very good example of where that transformation already happened, right? Which is how many of us were on video calls with our doctors up until COVID, and now it's almost become the norm. That will happen to every area, right? In some ways, this is like the internet started off as the internet, but then it became bread and butter for every particular use case. And I think you'll see that happen with collaboration as well.
Yeah, definitely. That is really changing the way we think about a lot of different things. And Javed, I think you just maybe started the next generation of startups that we're going to get calls from. So, but you get great pointers there. And I think the next couple questions, I'm going to try to combine them. I think essentially they're asking a question that we can't really answer. It's like, which is, what are you going to acquire next, right? So they never stop trying. I'm super impressed. They know we can't answer that, and but let me ask that question for them in a different format, and maybe that we can help satisfy the audience curiosity. Maybe collaboration space is very, very broad. You just cover a lot of grounds in a short amount of time. And also the innovation pace is super high, right? So because things are shifting, and then you're gonna, as you mentioned, things are gonna continue to innovate to provide that best experience. And so how are you thinking about kind of this pace of the innovation? How are we looking at that? And what are some of the key areas that's top of mind for you for investing in? So let's not specifically talk about acquisition, but like organically, inorganic, like top areas that you're thinking about. I think you already highlighted a lot of them, but if I format it in that way, what are some of the things that's top of mind in terms of the pace of the innovation, and how are you investing for your team?
Yeah, and the pace of innovation has been extremely fast, and I think it's going to stay that way. Which means the way collaboration approaches it, and maybe I should talk to that a little bit, right? So we believe that we fundamentally have to, while we may not be able to innovate in every one of these spaces, you have to have a baseline set of platform and innovation happening inside the company, right? And we don't want to just be going through or growing through acquisition. So we focused internally on organic development in certain core areas, which is around our platform. And the last 2 years, if you've read some of our press releases, we talk about 1,200 plus new features. So that pace of innovation is going to continue organically. But there are certain areas where we take a combination of partnership and an acquisition approach. And on the partnership front, the way we want to approach this is, I talked about how collaboration is going to get injected into everything we do. And we want to partner with these other tools and solutions where somebody else, a good example would be with larger companies, it's things like ServiceNow and Salesforce and even the Microsoft ecosystem. So we want to make sure that we are building tools that helps us integrate, embed our technologies into those solutions. And that is often a partnership, whether it's a smaller company that's enabling that or the larger companies themselves. But then there are certain areas where we know that the investment's going to be higher, so that's where we take an acquisitive approach. And if I were to kind of go back to some of the areas I talked about, we've traditionally had a pretty strong presence with hardware. And then the core software platform, we feel pretty good about building that organically. But the adjacencies is where we continue to look for interesting areas. So one example would be the kinds of tools that we use are changing. I talked about Vidcast, which is an asynchronous video communication tool. We decided to build that organically. But I think you'll see other kinds of similar tools emerge for other use cases. So that's one area we'll continue to look at. Our approach to that has been, we're going to provide a collection of tools for the future of hybrid work. We'll build many of those ourselves. Some of those will emerge in the next few years, and we'll look to kind of partner and acquire over there. And then I come back to AI because some problems are faster solved by just acquiring a bunch of really smart people. And we've done a very good job the last couple of years, right? So Babel Labs comes to mind, which was a very hard audio problem, right? Now we could have gone and hired a bunch of smart people and built that over a couple of years, but the fastest way there was to acquire a company. And that product is now in all of our products, including this meeting over here. So hard AI problems, whether it's audio or video, that's the other place we continue to look at. And then I'll finally close with one area which is relatively, you've seen a lot of consolidation, which is, I talked about convergence of the platform. There is also a convergence happening with how you interact with your customers, so contact center. And that platform has traditionally been separate from the traditional the industry term is UCaaS and CCaaS, right? So you're going to see those two things start to come together. But the contact center interactions are also changing. How you support customers has gone from voice to more digital. And I think that's another place where I think there's going to be a lot of opportunity in combination with AI.
Yeah, that's super fascinating. And there's a great question that came in. I'll just follow on because it's tied to, you mentioned AI and the technologies there. One of the questions they asked is, what is the kind of balance that you see going forward between kind of real human interactions, just the way we are, versus kind of adding filters and layers and AI, maybe even AR, right? So eventually, like, I don't know, we can make ourselves out to anything we want to be. What do you see that as kind of the future for the enterprise and for WebEx?
Yeah, I mean that is a fascinating and scary space, right? So, and we take a deliberately measured approach because we are focused on the enterprise customer, right? So, Snapchat like filters, they're great, but ultimately there are certain enterprise use cases where they might be needed. So, we've taken a more measured approach versus some of our competitors. But at a macro level, and there's a fantastic blog that we published just last week by Chris Rowan, which I would encourage reading. And it's not me pitching the products; it's just a completely different way of thinking of things. We think of if you were to take this meeting, there is a real-time audio and video stream that we are all exchanging. And if you were to break that stream down, right, you can. There's things like my voice, background noise, my image, background images. There is the volume level, there is the quality of the brightness. What we've built is a platform where we can decompose these things in real time. So now I can in real time start to change aspects of audio and video, right? The way we are able to do that is through AI, right? So what AI is going to allow you to do is take this real-time media infrastructure that the world built and now be able to enhance it for a good reason, right? Sometimes there's somebody in the background and you really want to be able to include them in the conversation as an example. Or sometimes there's good reason for you to remove the background because it's distracting. It was very relevant during COVID where we don't realize it, but there's a whole class of people who did not want their background shown during a meeting. So we've approached in the context of real-time media as a decomposable set of archetypes that you can then manipulate on the fly. But at the same time, I think the industry also owes it to our customers, end users, to make sure we're being responsible about it, right? Because there is so much information packed into these interactions, what's being said, right? Who said what, where were you at a given time, and we have to be very, very careful about how we use that information. Our approach to it has been making sure that it's only available to who owns that data, which is the end user. But that is going to be an area where we will continue to innovate. We've done most of our acquisitions in that space the last few years, and you'll continue to see us be interested in that space. Yeah.
Yeah, so I'm watching the time, and we probably only have time for maybe a couple questions, but I did want to get a couple points in. They're kind of unrelated, but maybe just kind of
Sure.
kind of rapid fire questions at you just so that we can address the incoming questions. One of the things, and you are starting to touch on that, kind of this specific enterprise requirements around compliance and security. We made an investment in Theta Lake for secure compliant meetings. So maybe a few seconds on that, and then maybe a few moments. People asked about the contact center, so they
Yes.
want to hear about that. So we're going to get to touch on that. So I just want to at least have an opportunity for you to touch on that. I'm sure it will come up in the next panel as well as we look at kind of broader trends and all that. But I want to give
Yeah.
the audience a chance to hear directly from you those two topics, and then maybe we'll have a closing
Sure.
question.
So let's start with security, right? So think about what was happening the last couple of years. We had employees at home on their home network on a device that hopefully was a corporate device. In many cases, it wasn't. Connecting with some of your most important assets, your presentations, your conversations, your meetings, including things like whom am I meeting with, the agenda of the meeting, what might have been said, the transcripts of the meeting, but connecting to a third-party cloud. It wasn't even touching your network. It wasn't even touching your edge. And we lived 2 years that way, right? So what does that mean from a security standpoint for you if you're responsible, if you're the CISO or an IT and responsible for it? That fundamentally changed how we worked before, where you typically were on a corporate managed network, on a corporate managed device. You had QoS for quality, you had all sorts of filtering. So that has changed. And now the responsibility is now ultimately you are accountable and responsible, but you have to work with the cloud vendor because that is that they are seeing a lot of this traffic. So we've had to adapt our security and manageability tools to deal with that. And how are we doing that? Obviously we have a presence on the endpoint. We have intelligence we can gather from the endpoint. But at the same time, when it comes to our cloud, the ability for third-party solutions, whether it's a DLP solution or an e-discovery solution, to allowing them to plug into your collaboration tools. We've invested a lot in that. Obviously, security of your data center, also, all the certifications that are needed. That was front and center. But there's a manageability aspect to this too, which is how do I now get visibility into what is my employee population's experience like. So can I log into one single console? So this is a place where we've invested for IT. I can log into a console. I can look at all the phone calls that a particular employee made. What was the network path, because we have assets like Thousand Eyes and so on that can help us tell you that. So we can also control the experience all the way from the end user to the network in the middle, including the SP in the middle, and then into our data center. So that's extremely important. I think sometimes people forget that yes, employees are productive, but do you have the same level of visibility and control? So we've invested in that, and that's another place where we'll continue to integrate with third parties to provide the extra level of security, and we've built APIs for that. I think on the contact center front, there is voice, while still the predominant means of interaction where your contact center agents are talking to your customers, that is changing fast to be more digital, right? We all get SMS messages now in response to various interactions we have, which is good and bad, but that was the early digital channel, but you're seeing that move to Twitter, seeing that move to WhatsApp. So the way an contact center agent interacts with your customers is now a very different medium, and there's a whole class of tools that has emerged over there. It is actually the reason why you're seeing I use the term UCaaS and CCaaS, right? Industry terms converge, is because the underlying platform is going to be the same, but you're now seeing an agent console that's becoming less voice dependent but more dependent on digital channels. And then the next phase, which is starting to happen, is AI. Now imagine what AI can do to these digital channels. And then lastly, in that space, you're seeing an ask for more customization. So the ability to interact via an automated process, which requires these low-code, no-code approaches, is the other thing. That's why we did the IMI acquisition, which is we had the assets around the core capabilities. We wanted to plug in a programmable kind of contact center. So that's the other space that is going to go through a lot of change.
That's awesome. So I one more question, and
Sure.
then I'm gonna hand back to Pradeep. So I think the audience tuned in to your comment. We did 5 of the last 13 acquisitions at Cisco in the recent time. So clearly, you're very much a focus, and so probably coming from the founders' audience base about kind of what would be your advice to the founders who are navigating and growing businesses, whether they want to exit through acquisition or not. I think it's just more of a general question because we do see a lot of startups. What's your advice to the founders navigating their business and trying to grow their business in a collaboration space? What would be your advice to them? And we can end with that.
Yeah, so I think I can talk about how I approach or how collaboration at Cisco approaches these, and maybe that'll help. We've made a deliberate attempt, the last 5 acquisitions, to make sure that there was a cultural fit. Because we've learned from previous acquisitions, right? So, and by cultural fit, what I mean is the founders and the key and the team. How does that fit with a big company like Cisco, specifically the WebEx team? Now, how do you kind of measure that, right? It's easy for me to say that. Where possible, and I think we did it in 4 out of 5 of these acquisitions, we were able to get a partnership going, whether it was an early integration or a feature, and our team spent an extended amount of time working together, and that resulted in a appreciation both ways. And our successful acquisitions have been a side effect of that, because now you knew the people you're going to work with. And I know this sounds a little bit straightforward, but I think having invested those time, we found that the acquisition and the partnership ended up being a lot more successful. Now, it's not always possible, right? Especially if it's public company, it's a little harder to do. But anything you can do to kind of measure that or experience that up front, I think goes a long way. And to me, that is just best done by spending an extended amount of time, and we try to do that. On the other side, I think usually when a company like Cisco is involved, the first question that a founder has is, "Oh my God, big company, I'm going to lose control? Am I going to get lost in the bigger maze?" And there is a real risk of that. I'm not going to kind of deny that. But as you agree to get acquired or think about acquisition, I think you want to think about where your business is, and is a company like Cisco really going to be able to take you to a 10x scale, right? And that is really the value prop that Cisco brings to the table. We've got a massive distribution system. It is a very different distribution system, but if you see that path, if you think of it that way, there is a massive amount of scale that Cisco can bring overnight. And the best example would be some of these acquisitions, specifically Babel Labs, right? So Babel Labs, relatively small in terms of usage when they were acquired, and today we do tens of billions of minutes scrubbed for background noise removal, and that happened, by the way, within 3 or 4 months, right? So we were able to take this technology, integrate that, push it out to our hundreds of millions of users, and immediately get scale. And that is a real value that Cisco can bring. So I think that's the other side. I look at the adoption curve when I'm looking at companies to acquire, which is not just the traditional SaaS metrics, which are everybody's familiar with, but also the kind of usage metrics, which is is there a virality aspect to things? And that is fundamental to collaboration, right? The nature of the collaboration business is that you better have a product that's growing virally, because there's not going to be 10 products doing the same thing over time. So that's the kind of main thing we look at as we look to acquire a technology or a company.
That's terrific. I think we could spend hours. You cover so much ground. Thank you so much, Javed. It's just been such a fascinating conversation, so relevant to all of us, actually. Every single thing you said, each one of us, into our companies and our customers. So thank you for your time. And what I'm taking away is you're going to continue to be really busy, working those very long hours. And then I think our team will be super busy too. That's the summary of that conversation.
Yes.
We just had. Just so much innovation, so much excitement coming at us, for all of us. So at this point, I'm going to hand back to Pradeep, and thank you so much, Javed. I'll see you later in our real meetings.
Yes, it's a great space to be in, and thank you for having me. Back to you, Pradeep.
Thank you.
Thank you, Jamie and Javed, for that insightful discussion on how we are helping customers improve hybrid work experience through reimagined workspaces and the ever-expanding suite of devices, applications that deliver employee experiences and customer experiences for all our stakeholders. Thank you for all the questions. Please keep them coming. Next up, we have our venture capital panel moderated by our very own Mike Lin, Director of Cisco Investments and Corporate Development. Mike will be joined by David Yulovich, a general partner at Andreessen Horowitz, and Stacy Bishop, a partner at Scale Venture Partners. They'll be discussing emerging trends in collaboration. As a reminder, again, we encourage everyone to submit your questions in the Q&A panel. Mike, take it away.
Thank you, Pradeep. Wow, what an engaging and insightful discussion between Javed and Janie. It's really great to hear the Cisco execs' perspectives on emerging trends in hybrid work. And now we'll get a chance to hear the external perspectives from leading investors. So I'm thrilled to be moderating the VC panel for Magnetic Collab 2022. By way of introduction, I lead collaboration, venture capital, and corp dev team. And this team's mandate is to source and scale innovation happening outside the four walls of Cisco in a tight collaboration with our Collab BU leadership. We've been super active on both M&A and investments over the years. And I'd say the best part of my job is the opportunity to partner up closely with disruptive and innovative entrepreneurs and investors. So before I transition to our investor panel, let me quickly go over the results from the Slido poll, really to get the audience to start thinking venture capital. So the first question was, where do you expect the VC funding activity in the US to be in 2022 relative to 2021 when we really had a record year with over $300 billion of funding? It looks like the audience expects 2022 to be up 25%. So continuing the momentum that we're having. Now, let's go to the next poll. And the next poll was, if you had $1 million to invest, which segment would you invest in? And I'm really, really glad to see that the audience here is super bullish on collaboration. It is very top of mind for us right now, and exciting time for collaboration. So with that said, I'd like to welcome our investor panel consisting of two of the most influential VCs in the collaboration space. They come from very different backgrounds and therefore bring diverse perspectives, which I think is really going to make an insightful panel discussion. I do want to introduce them very quickly because if I leave my intro up to them, I think they're not really going to do themselves justice. So we have one panelist who's been a longtime investor in the collaboration space, who's really seen it all from investor perspective. From IPO exits like HubSpot to sales to strategics, including ExactTarget to Salesforce, Omniture to Adobe, and many others. Her portfolio includes Abstract, Aviso, Lever, Namely, Textio, and unicorns like Demandbase. And on the other hand, we have a second panelist who is a familiar face to Cisco. He was a repeat entrepreneur, successfully sold his companies, including the sale of OpenDNS to Cisco, ran Cisco's security business for a few years, and subsequently turned into a VC investor. He's an active investor in the collaboration space, invested in companies including AnyRoad, ChartHop, Superhuman, Tandem, FirstBase, Workboard, and many others. So with that, I'll request Stacy from Scale Venture Partners and David from Andreessen to introduce themselves. And apart from your persona, it'd be great to for our audience to understand what differentiates your investment philosophy and your venture capital fund. Because today there's so much capital out there that venture capital is increasingly getting commoditized. So over to you, Stacy.
Sure. So yeah, as Mike highlighted, I've been investing in venture for over 20 years. Some additional investments we as a firm have made. We had a lot in collaborations, so RingCentral, Box, DocuSign, Bill.com. We were actually investors in a company called Placeware, which was a competitor to WebEx back in the early 2000s. So early days of web conferencing. So we've been on the web conferencing trend from long ago. But where we're specifically focused is on software selling to businesses, and we call it cognitive apps. And what that means is where the intelligence is actually in the software. So you're bringing some sort of AI into the software. So it's more than just, a database where you enter software. And where we specifically focus is we invest in companies that already have a product in market. So we spend a lot of time on trying to help them with the go-to-market experience, because a lot of the dollars after the product has been developed is really on how do you distribute this product? How do you get it in the hands of users, whether it's a bottoms-up sale or whether it's sold by enterprise sales reps? So that's where we try to differentiate, is try to focus on the go-to-market aspect.
Awesome. It's good to be here. Thanks, Mike. Thanks, Stacy. And I saw Janie earlier, who I haven't seen in a while, so it's good to see familiar faces. So I work at Andreessen Horowitz, and we invest at all stages of the entrepreneurial journey. My focus tends to be on enterprise software and applications, and that means either coming in at the earliest seed stage, where it's just an idea from some brilliant founders, or later on when there's an appropriate time to add more capital to fuel growth, or in the later stages when it's really time for sort of geometric expansion and global and international expansion. And I think, venture capital is increasingly commoditized, but I think that the partnership between an investor and entrepreneur remains a really important one. And I think that we spend a lot of time, and I know Stacy at Scale and we spend a lot of time with entrepreneurs, really trying to help them understand how to avoid the common mistakes so they can make at least new mistakes, and help them build teams to ultimately build really successful and enduring businesses.
Great. Well, let's dive right into the questions, and I'll also we're monitoring the questions coming in from the audience, so please keep them coming, and I'll weave them into our discussion as I see fit. So, what continues to drive the pace of investment that we've been seeing in the collaboration landscape, and how does your firm approach investing in this dynamic space? David, maybe we can start with you, and then go to Stacy.
Yeah, sure. I mean, look, I think the world of enterprise applications and the way that we use enterprise technology has been rapidly changing over the last decade plus, but then really with COVID and everybody changing the way and where they work and how they collaborate, it created an amazing investment opportunity to really find entrepreneurs that understood how this new world might look and the ideas that they have. And so we made a tremendous number of investments, some maybe a little bit ahead of the curve in 2019, but then when COVID hit, saw companies that were really ready to expand and had their product in market, and change the way people think about synchronous collaboration and asynchronous collaboration. And when we make these investments at the early stage, sometimes you don't know what exactly is going to work, what's going to find perfect product market fit, and what won't. And so, we look at a landscape and make a number of investments across people that have different approaches and different ideas. And then we do everything we can to help them. And so I think that change with COVID really created an opportunity to say, hey, how do people want to work? How do they want to communicate with each other? How do they want to collaborate and share information? And that represented probably one of the greatest step functions in how enterprise software is consumed from an end user perspective that I think certainly I've seen in my professional career.
Yeah, agree on that point. I mean, not a ton to add there, but I mean, obviously the collaboration started with just being able to put the software in the cloud and being able to quickly collaborate. And then obviously COVID became this accelerant where just suddenly everything, we all had to, I mean, it was amazing to watch these companies just rapidly grow because, while we in the Valley were probably adopters of this technology and using things like Slack and Zoom and even DocuSign or whatever, suddenly you had the rest of America jumping on board to these apps because people were remote. So you just saw this incredible traction. So I think it will continue going forward. And I think, we collapsed what probably would have taken maybe 5 to 10 years to get to in the course of 2 years.
Yeah, I think what is really interesting and dynamic about this space is, because of the pandemic, not only were the last 2 years very different than how things were pre-pandemic, but as we look forward, the future will also look very different, right? Especially as we're starting to get back to the offices, and hybrid work is really becoming the norm. I think the statistics that I've heard is virtually all meetings, 98% of meetings going forward will have at least one remote participant. So hybrid work is really becoming the norm. And, I think that in turn also gives rise to many new business models. For example, you heard Javed talk about, workplace management, a space that historically has been skewed, towards the facility managers, right? But in hybrid work, the focus on employee engagement is really creating opportunities for companies like Robin, Envoy, which is an Andreessen portfolio company, and many others to really shift the focus towards employees and providing a seamless experience so they can understand when they should go into the office based on what their colleagues are doing, supporting their needs in and around scheduling, booking systems, providing insights on workplace utilization. So something that's on top of mind for many organizations, including Cisco right now.
And I'll just add one to that. Yeah, we're investors in a company called VergeSense, which goes specifically to the desk level, understands who's sitting at the desk because, if people are only going in 2 days a week, you have to understand where are these people sitting and is there space available?
Absolutely. Absolutely. Many different approaches to that space, I would say, whether it's sensor-based approaches or leveraging some of the infrastructure that's there, cameras, Wi-Fi, et cetera. But it has been an exciting space and very relevant for us right now. So the pandemic and the new business models being born, I think, have really contributed to a record year in 2021 from VC funding perspective. And as we look forward to the remainder of 2022 and into 2023, what is your expectation around the level of funding activity? Stacy, maybe we can start with you and then we'll go to David.
Sure. So I thought it was fascinating, the survey, to see that most people think, like 42%, I think, thinks it'll be increased in 2022. I believe it'll actually be less. 2021 was a banner year from an investment standpoint, way above levels we had seen in the past. And I think what's happened is, given the dynamics of the public markets, prices are down and people aren't investing at this, same level. And what we saw a lot in 2021 is, I would say, companies opportunistically fundraise. So a company that was doing really well was like, oh, VCs are reaching out to me and they're willing to give me money at this price. I think I'll take it. So you saw these kind of big monster $100 million plus type rounds happening. I think and these companies didn't necessarily need the money. So what we'll see, I think, in 2022 is there'll probably be less of that opportunistic fundraising, because prices won't be quite at the levels that they were in 2021, given the dynamics of what we've seen in the public markets and what's happened to the SaaS universe of companies. I think, they're down significantly from the peak of, I think it was February of 2021. So a little over a year ago, we were at the peak multiple evaluations. And so I think you'll see less of that opportunistic funding. When I look at our companies that raised quite a bit of money, I think they'll say, we've got a big balance sheet, there's no need to go to market. That being said, I still think it's a good opportunity to invest, but you won't see those monster rounds. So therefore, overall funding will likely be down, I think, from 2021.
Yeah, I think the aggregate dollars, that's probably right, only because it's hard to top 2021's monster fundraising rounds that we saw. But it is, there's a lot of people out there still starting companies. It's easier than ever to start a company. So hopefully we'll see more companies funded, maybe with less dollars per company and maybe less aggregate dollars, but an overall much wider berth of companies being funded at the earliest stages, at the seed stage and at the Series A stage. And then as they spend the next couple of years figuring out, we only know what remote work looks like in a pandemic environment. We don't really, and Cisco knows because they've been doing it for years, but the broader enterprise world doesn't really know what remote work looks like in a non-pandemic environment. And so I think as people sort of settle into a new modality for work, and you have all these people that are sort of now grown up digitally native entering the workforce, you're going to have a whole bunch of new startups come around. And so my hope is that in 2022 and 2023, we see a lot more seed companies, a lot more seed funding for seed stage companies, a lot more seeds being planted, and seeing how they blossom over the coming years. But I agree with Stacey that the monster rounds are probably done for all but a small exceptional number of companies.
Yeah, no, I tend to agree that it's probably going to be hard to top 2021. And what we're seeing with valuation in the public markets will permeate to the private markets and generally make for a less attractive funding environment for most startups. There is, however, a school of thought where, given the amount of dry powder on the sidelines, the high quality names will continue to get bid up. Any thoughts you have on this?
Yeah, I think, I think, look, a lot of venture funds raise really big funds and they have capital to deploy. I think at the end of the day, though, our job is to return money to investors. And so, I think at the early stage investor class, we're still not going to write checks that we have trouble underwriting or explaining. That may not be true at the top of the market, but it certainly, I think, is true for people that write Series A checks consistently.
Stacey, any thoughts there?
Yeah, I think that's right. And I think David brought up a great point. I mean, I think perhaps the number of companies getting funded will still continue. And I think people when we look back, sometimes when you're in these sort of, down years from a market standpoint, it's a great time to invest. I think the companies that are sort of born in the downturns in some ways are better off, because they've done more with less. They've become more efficient with their capital. And sometimes, when looking back, some of our best companies it started in these kind of types of years. So I think there can be great investment opportunities. And there's so much happening in the dynamic work world because, as one of you said, we don't know what this looks like in the future. We don't know what it's going to be. I mean, we're still figuring it out as our own office, like how many days a week should we be in? What days are people in? What makes sense? What doesn't make sense? So it's all, and my portfolio companies are figuring it out. It's a nutty time still, of how the world works.
Mm-hmm. Yeah, no, I think that's a great segue into the next question. So if we maybe transition from funding activity to kind of exits, over the past 3 years, there have been several notable exits across collaboration software categories, IPOs and acquisitions of Slack, Asana, Freshworks, and many, many more. Which categories of collab software do you anticipate, either going public or consolidating in the next 12 to 24 months, and why? And recognize that, at least as it relates to IPO, that's going to depend on the, kind of market environment. But curious to get your take here, and let's start with Stacy and then go to David.
Yes, I mean, there's a lot of opportunities, I think, of companies doing phenomenally well. I mean, what we're seeing is that collaboration is embedded into a lot of the tools that people use today. And so some of the companies that I think are sort of primed for exit now, that aside, the IPO market's not very open right now, but when it does open, some of the phenomenal names out there: Miro, Mural for whiteboards, Airtable, like a database for Excel, Notion and ClickUp for collaborative project management, Gong and Outreach in the sales collaboration space. So those, just to name a few of the companies, and they'll continue. I mean, one of the things we look at, even though we're kind of seeing the public market downturn, we haven't yet seen it in the underlying portfolio. There's still companies are tracking to plans and doing well, and I would imagine these companies will as well. So as soon as the window opens, I would imagine one of these kind of bellwether companies will likely go out.
Anything
Oh,
you'd add to that, David?
that was an awesome answer. I don't have anything to add.
Yeah,
It's a great list of companies, and those are all great products.
Yeah.
Mm-hmm. Yeah, I guess an interesting question, a follow-up to that is, assuming the public market valuation stays subdued, which probably also impacts value expectation on the M&A side, what's your view on maybe some of these mature companies that you mentioned, that have raised massive rounds and are sitting on a big pile of cash? Do you think that leads to them staying private for longer until public market valuation improves, or do you think they're going to target sale to strategics where they can perhaps get, excuse me, a higher valuation from synergies?
Yeah, I'll give my shot. Stacy has a lot more experience in venture and has seen the movie a lot more times than I have. Um, I don't think companies are going to pressure themselves to going public, and I certainly don't think these companies are going to sell themselves. We're seeing not just liquidity for some of the executives and founders, but increasingly there's liquidity options and there's tender offers for the employees. And so these companies that have very large balance sheets, I think Cisco knows this better than most companies, that it's one thing to buy a company, but to make it successful is a whole nother thing. To make the actual acquisition, the integration successful, which is a playbook that Cisco has done many times, but most companies really don't have the muscle developed to make acquisitions successful. So I know that a lot of the companies I'm working with are really trying to figure out, the ones that at least have a big balance sheet, they're trying to figure out, hey, can we become acquisitive? Can we leverage some of the distribution we have with customers? Can we start to take advantage of those channels we've developed to bring in other technology and other companies and actually make them successful? And so I think hopefully over the next couple of years, we'll see companies start to become more acquisitive of smaller tuck-ins, learn how to develop the muscle to make those acquisitions successful. Most startups are very bad at building their own business, let alone acquiring someone else's business and making it successful. So I get excited about seeing companies do that. And then I think you'll see a lot more M&A. I just don't think it'll be for some of these high-flying companies. Some of them are still really, even in these subdued valuations, they may still exceed a lot of the M&A thresholds for a lot of buyers.
Yeah, I mean, I would agree with that, just because when you look at, if you have these public companies that have, what we'll say, whether or not we argue it's depressed valuations, the private companies aren't going to adjust down their valuation. So there's a bit of a disconnect between where the public market company might be trading at 5 times revenue, and the last round price on these private companies might have been 20 times revenue. And they're not going to want to sell for, even though they may be faster growth, and there's always a debate of how much do you pay for incremental percentages of growth. But there's just that disconnect. But on the other hand, and I'm already seeing this in my portfolio companies, looking at these smaller tuck-in acquisitions, a company that might be 50 or 100 million in ARR, looking at, what $1 million company might I be able to acquire where it's a product extension. It's, I offer this and I want to add something that I can add to my product set. And where that's less risky is if there's APIs, the integration risk is lower from that perspective because you're kind of bolting on this product rather than trying to integrate it in. So I've seen that work for companies, and I've seen that. So I think we could see some consolidation at the lower end, where you kind of, like, I'm seeing it in the marketing tech space. I'm seeing it in the HR tech space, or recruiting space, where they're just bolting on these smaller companies. And especially in an environment where maybe capital is harder for the company with less traction, they'll be more willing to sell, but not the big bellwether monster, unicorns or decacorns or whatever we call them now.
Yeah, no, that's agree with that insight. And I think maybe another segment in the market where we can expect to see some M&A is maybe the companies that went public through SPACs, contributed to the excess supply in the market. And many of these companies probably shouldn't have been public in the first place. So with the prices where they are, I expect that to be another segment where there could be some M&A activity.
Yeah, that's a great point.
Maybe looking back in the last 2 to 5 years, what are some of the biggest trends that reshape the collaboration software market, and how did these trends really redefine remote and hybrid work? So David, maybe we can start with you.
I mean, I think if we put COVID aside as a major trend that was unforeseen, I think connectivity enabled people to really collaborate synchronously in real time in a way they hadn't before. So, you can define collaboration a number of ways. Using Box as a file sharing service is one modality of collaboration. But then the other things that have changed is really synchronous video. You've seen now applications like Figma that have sort of multiplayer mode by default. They're natively multiplayer, where you can sort of see people's mouse cursors moving. That level of low latency, high fidelity, synchronous collaboration really did not exist over more than a few years ago. And I think that has become almost table stakes for a lot of SaaS companies today, to be almost multiplayer by default, real time by default. And even if people use them in an asynchronous way, they provide sort of a synchronous-like experience when you need it. And that's unlikely to go away, since we all now have mobile devices. We have high-speed connectivity at home. We have better cameras. We have better processing. And then the last thing I guess I would say is, I think we're in the early innings of this, but we're starting to see the influence of AI, whether it's in computer vision by touching up our video. Like, I probably look better than I really look in real life. And maybe there's a ways to go for computer vision on that, but then also recording meetings, transcribing meetings, capturing action items. I think we're seeing more and more companies do that. I don't know if it's hit the mainstream quite yet, but I think those things are starting to become not maybe expectations for the real early adopters, and then they'll become expectations for everyone else soon.
Great. Stacey, anything you'd add to that?
Yeah, and just that you're seeing a lot of applications embed this kind of collaborative functionality in them, where, video, chat, commenting, whatever it is embedded in the actual app, so that people maybe don't have to go outside that application to be able to do that functionality. So that's one. And then I'll highlight the other one, just kind of, we call it the unbundling of Microsoft Office. So, you see with Airtable kind of replacing Excel, Notion replacing Word, email hasn't been replaced, but people are augmenting it with a superhuman to put on top of it. So we're just seeing sort of that separation of other, obviously Google's in the mix as well, but we're even seeing other apps emerge.
Yeah, no, really interesting perspectives here. And, I think Javed alluded to it, right? Injecting collaboration in really into specific use cases to have a seamless experience and collaboration. So a single app or a seamless workflow that can really handle everything end to end to get a specific job done, which really requires the integration of, what I call productivity and collaboration, right? So many examples in the market, some of which have been mentioned by you guys, whether it's Figma for design, our portfolio company Gong as it relates to the sales persona. So I do think that is one of the more notable trends here taking shape. And then maybe on the other side of most impactful trends are trends that perhaps missed the mark, right? So what were some of the collaboration trends that failed to kind of take off over the last few years? Stacey, maybe we can start with you and then go to David.
Sure. Well, I'll highlight a few. Like next generation PowerPoint. That's one that we haven't really seen emerge when I was mentioning the unbundling of Microsoft Office. The whole virtual office, the like kind of the little, seeing these little rooms and entering, I never liked it anyway. So I'm glad that didn't take off. Augmented reality, virtual reality in the workplace also hasn't really emerged. I mean, maybe there's just still issues with people not, if I use the AR sets, they kind of make you feel a little ill. So maybe you don't want to be on one of those all day long, but those are a few that I've seen that haven't really taken off. Oh, one other is the all-in-one meeting platform. Like we still, there were mentions of it where the note taking, the chat, generating the tasks coming out of it, there's still somewhat separate apps for that. So that one I still think could happen, but some of these other ones, who knows how long it will take or if they will ever happen.
Yeah, I'm trying to think about it. I think those are really good answers. Anyone who's tried AR knows you get AR fatigue very quickly if you put on AR glasses. I think the context switching between something near field and in the real world is very difficult. And the spatial audio, sort of walking around rooms, it doesn't make any sense. Like one of the benefits of a virtual meeting is you don't have to like walk to the other building and walk down the hallway. And when you're in these spatial virtual environments and you have to like walk virtually to some other room, it doesn't make sense. So those things have not worked. Sometimes things don't work because it's a matter of timing or the form factor. So maybe we'll figure out the AR and VR environments. But so far the user experience has not compelled, I think, anybody to really continue them yet.
Great. Maybe going over to the next question. In such a crowded market, right? How do you go about identifying next generation leaders, building emerging technology that's really going to have an impact? So Stacy, maybe we can start with you, and then we'll go to David.
Sure. I mean, we spend time on Product Hunt, Twitter. We're constantly asking people. There's, those people in your office who are the early tech adopters. So you're always asking what apps. And then more specifically, when we kind of discover things, you really try to get engagement metrics and figure out how are people using it. We get excited about an application that somebody uses every day. I mean, imagine now when Slack or Zoom goes down, you're just like, you can't function in the same way that you could in other things. So that's really looking for that engagement. Are people using this daily? How often are they using it? So we've got a lot of metrics, comparison metrics around that. So those are some of the ways that we try to uncover these new apps. Frankly, now I have teenage kids, so I can even ask them. My daughter, who's only 13, was an active Canva user for so many years, even though she was so young, and I had no idea that she was a user. So even looking to the younger generation is a good source of what's taking off.
Yeah, I think that's right. For things that are pre-product, before there's engagement, I guess the only thing I think I look for is really a founder that has just a view of the world that's totally new and unique and different, and almost seems a little bit ridiculous. I think a lot of great things start out sounding like a top toy or kind of looking like a toy. But then if they have the technical chops, or they've assembled the team, or they know who they want to hire to help make that crazy idea a reality, is pretty interesting. I mean, I think Figma is actually a decent example of this, because if somebody told you 5 years ago that they wanted to build a Photoshop replacement or an Illustrator replacement in the browser and have it be multiplayer, the idea that that could have been done with low latency, with all the functionality you need, it sort of seems kind of crazy, with integration with hardware tablets and all these things. Like we didn't even know if the browser was really able to do it, but Dylan and his co-founder understood that JavaScript and the way the browsers were exposing, some of the JavaScript primitives and the ability to do WebGL and to take advantage of the GPU was all changing really rapidly. And they saw what was happening with Chromium and Firefox, and they just knew that it was going to be possible to do real local application level kind of experiences in the browser. And I think when you pair somebody that has that vision with the technical chops to achieve it, that's what I would say I generally look for.
Great. That's great insights, and maybe good way to transition to the next question, which is kind of a multi-part question, maybe for the audience to kind of get a view into how you're thinking about the future and maybe your next investment. So maybe what are some of the areas that you're excited by? Any emerging innovation trends that you're watching closely? any specific areas that you think is ripe for disruption? Stacy, you mentioned a few of them, like next generation PowerPoint, all-in-one meetings. But curious to kind of get your insight into, where do you think is going to be the next investment for you guys? Maybe we can start with Stacy.
Sure. So, I mean, as I mentioned earlier on, where our focus overall at scale is looking at is where AI can bring automation. So, more and more companies are embedding stuff into Zoom and, and Slack. Is there a way that AI can, help generate that task list? I mean, we see this. You guys have the investment in Gong. We're in a company called Observe, where it's recording the salespeople or the customer support people and then highlighting where there might be problem areas. So wherever you can see that automation happening. So we'll continue to look for that. Also, just like collaboration is really focused on kind of internally, what's ways to make it where it's more external collaboration. Like, there are Slack channels with external people, but how can you make that better? When we look at a lot of vertical SaaS, how can you bring this collaboration into the vertical SaaS? So those are some of the areas of interest for us.
Maybe a quick follow-up to what you mentioned around the AI, Stacy. So obviously that's been a crowded space, right? Conversational AI or AI automation, with many, many different startups, lots of funding going into that space as well. As an early stage investor, like how do you differentiate and evaluate the players and kind of identify the right horse to bet on?
Yeah, I mean, we're trying to look where it's automating probably the more simplistic tasks. So we spent a lot of time in the conversational AI and looking where, for example, we made an investment in a company where it was doing chatbots for recruiting, and it was just doing that front end of gathering the candidate, that you apply for a job and asking a few questions and qualifying the candidate and then automatically scheduling them to an interview, where typically a recruiting coordinator did that, but it was a low value task. So oftentimes we look, where can the automation replace those simplistic tasks? And then the person can move on to the more higher value task, like, doing the real interview questions instead of all that. Typically these companies have a recruiting coordinator, and all they're doing is pre-screening, going back and forth, trying to get people to schedule an interview. Well, if you automate that, it eliminates that position, allows that recruiting coordinator to focus on the high value part of the process, which is, in interviewing the candidate. So that's more specific, where you can automate away the sort of simplistic tasks.
Yeah, yeah. And David, what about you? What are some of the areas that you're closely monitoring for your next investment?
Yeah, I mean, I think that, if you think back 5, 10 years ago, if you wanted to build a company that leveraged AI, you had to hire all these PhDs and researchers. But now there's a lot of libraries and APIs you can use to do natural language processing, to do text to voice or voice to text, to do computer vision and labeling. And so there's a lot of these things that seemed like they were out of reach are now quite in reach. And the same applies actually for video streaming. In the old days, if you wanted to have your content everywhere, you had to build your own CDN, but then you could start to use third-party CDNs. The same is true now for streaming and audio. You can do live streaming and build it in your application. You can do sort of video conferencing and build it in with WebRTC and a bunch of these third-party players. And so where I look is people that are taking advantage of new technologies, that are pushing the envelope and how people use them. I think that there is a lot of opportunity in vertical solutions and people that focus on vertical industries that have yet to be really positively disrupted by technology. I think there's a ton of opportunity in the education market. I think the way people think about school and education has changed dramatically. Obviously universities do a lot of online learning and online streaming of their coursework, but I think that that'll actually trickle down all the way to elementary, middle, and high school now. I think the way that people think of things like the construction industry, right now there's only one major SaaS company called Procore that's sort of like the one big construction tech company, but there's actually tons. I mean, the construction and housing industry in the United States is a major part of our GDP, and there's almost no software companies that really power and drive that. And that includes even the supply chain behind the scenes, as well as the construction side, all the way to the home buying process and the banking and mortgage process. So there's a ton of opportunity, I think, in vertical SaaS. We're seeing people add payment rails. We're seeing that things that were happening in the consumer economy that get me excited around, like this idea of like the creator economy is really another way to say, like, we're allowing anybody to become an entrepreneur. That creates lots of opportunities for building new enterprise applications, managing taxes, payroll, hiring, global hiring. All these things to me are areas where there's great investment opportunities and where I get excited, especially when people are taking advantage of technology that was previously out of reach, but is now quite accessible. And AI, I think, and AI in all of its forms, from computer vision to NLP, is really one of the more exciting areas.
Mm-hmm. Yeah, no, I feel like we can go on and talk hours and hours about this topic, but we are almost coming to the end of our time here. So maybe I'll transition to kind of the last question here before we close out. So, you know, what do you think, what do you look for in kind of the next founder you want to back? What are some advices that you have for founders joining us today? Obviously, you have very different backgrounds, so I'm sure that the advice that you will have is probably also coming from different perspectives. Maybe we can start with you, Stacy, and then a follow-up to maybe this question, which we're getting from the audience is, you know, what's the advice on how entrepreneurs should balance growth and profitability, particularly as we're potentially entering into kind of a cautious environment for fundraising?
Yeah, which you want me to start with the advice for entrepreneurs?
Yes, let's start with that.
Or the advice, or not the advice for what we look for in entrepreneurs?
Yeah.
Okay, so one of the key things that I feel like I've seen in the successful entrepreneurs that we've looked for is their ability to hire great people. The one risk that I see with entrepreneurs when they've been less successful, if there's this kind of mantra that they have to do it all themselves, that's never going to scale. So their ability to hire great people and allow those people to do their jobs is what to me makes a great entrepreneur. Like one of my, I was on the board of HubSpot, and the CEO of HubSpot would at board meetings, he maybe would talk for the first 20 minutes, 30 minutes, and then he would sit back and just let his team run the rest of the meeting. And it was just super impressive. He had the trust in his team to run that company, and he hired, really great people to do that. And so that's when I look at the successful, it's their self-awareness of where they're weak early on, to figure out like, ooh, I'm not really a finance person. I got to get a CFO on board, or go to market's not really my thing. So I really got to get a good sales leader, because entrepreneurs do have their things they're good at. And ultimately they'll still have to hire everyone for everything, but especially early on, really fill out your weaknesses and then let those people do their jobs. And it just creates the best companies.
Yeah, no, I think being able to hire the right talent and being able to delegate and have trust in your people is certainly a requirement for scaling your startup. David, what are your perspectives? Obviously, you come from the entrepreneurial background. You've also been operator and GM of a large business within a large tech company like Cisco. So any advice that you have for the founders?
Yeah, I mean, sometimes I joke that, although it's not really a joke, that the number one reason companies fail is they run out of money. And so, and people, I think founders sometimes forget this, especially in an environment like we've been in where fundraising seems easy. And so, my advice is generally that, like, when things aren't working, money is not going to fix it. Like, throwing more money at it and burning more cash won't fix it. So I think before you really have product market fit, you really need to keep the team lean. So you're iterating, getting a lot of customer feedback, really making sure that you're building a great product. And then even when you think you have product market fit, usually it comes in a few different stages where you'll get some early adopters and they'll just be happy with the key functionality you're delivering, but that will plateau quickly until you continue to iterate or evolve your messaging or build your top of funnel sort of demand gen. And so, I think companies need to be very conscientious of sort of constantly asking, like, what time is it? Where are we? Be really intellectually honest about where they are so that they don't get too far in front of their skis. And then when things really are working, then it's very easy to spend money and build it out. And then obviously, as Stacy and you both mentioned, nothing will make up for a bad team. And in fact, in the very rare, almost truly exceptional case where there's a good company built on a bad team, usually it could have been a great company that would have been built instead of just a good company. And so team is everything. And, great people can only hire great people, but bad people can never hire great people. And so if you start with great people early, it makes your life much easier.
Yeah, and David, I think you indirectly touched upon kind of that follow-up question from the audience around the growth and profitability. But I do want to give Stacy also the opportunity to share her perspectives there.
Yeah, I mean, I think in this environment, it's always kind of looking at your burn rate and just making sure when your cash runway, when you're out of cash, and how quickly can you adjust? We kind of have this thing we call the ripcord rule, and it says, which we kind of had to use when COVID hit because we didn't know what the environment was going to be like. And so basically companies, that's why unfortunately you saw some layoffs or dramatic cutback on spend, and it was to extend the runway until the company had some awareness of what their ability was going to be to either to raise money or get to cash flow break even. So you always want to have that in the back of your mind. I often feel like that's the board's role too, as well, to kind of make sure you stay on top of the company. Because one of the things we're always looking at is when the company's going to need money, which, we'll say if your cash out dates, whatever it is, you come back like 6 to 9 months, you bring that in 6 to 9 months. And then, but you want to look at what does the company look like at that point and how attractive is it going to be to external investors? We have this thesis on like, what is your minimum level of growth you need to have? For example, like if you're $10 million run rate and you're growing less than 80% at that rate, you will probably have a hard time raising money. So you have to have a certain level of growth to attract venture funding. And so if you're not at that growth rate, then you have to kind of go down an alternative path, which is maybe cash flow break even. And you don't want to tap into debt either, because that can just, cause concern for the company. You don't want to tap into debt to extend runway. So it's really the option then is you're not growing fast enough. You kind of have to go more on that cash flow break even path if you don't think you're gonna be able to track funding.
Yeah, yeah. Well, we are at time. Thank you so much for the insights and your perspectives. In closing, also thank you for being a friend of Cisco. I mean, we feel like we just benefit from every interaction we have with you and from all the insights and perspectives. So thank you so much for your participation today. I will now hand it off to Pradeep for closing.
To Stacy, David, and Mike for their engaging panel discussion. It was great to learn about all those collaboration trends and the impacts of remote work. We've reached the end of the panels, and we hope you found the conversations insightful and valuable. Your feedback is very important to us, so please take a few minutes to fill out the survey. It's a quick survey by following the link, or easier, by scanning the QR code. There's just a few questions to help us improve and deliver content that is important to you. All right, we encourage everyone to also reach out to Cisco Investments team with any questions. Here's the contact info for all of us. To learn more about Cisco Investments, please visit us at ciscoinvestments.com or contact our team. You have the contact information here again. Following today's event, we will share the on-demand recording, survey link, and the event recap via email. Thank you, everyone, for joining us today, and we hope you enjoy the rest of the day. Bye.
Centers. Something we set up for maybe 10 homes had to be optimized for hundreds of shots a week and thousands of shots a month. Our engineers and operations team worked with Cisco to scale this as quickly as we possibly could, to do whatever necessary and bring whatever tools we have to bring to tell the best story. The evolution of technology, where we're going and what's going to be possible as we go forward is really exciting and fun to think about.
Between what's news and what's now,